Good morning. Good morning. Good morning. Gonna give everybody just a minute or two to come in. You should be able to see my screen. Happy Halloween. I hope you enjoyed it. We actually, it's funny because I feel like it's shrunk, at least where I am. Like we only had we didn't put we turned our lights off. We didn't have anything, but we only had like 4 people even knock at the house. And most we're on a loop. It's like they just avoid the loop. I don't know. Had about 25. That's a good number. Good morning, Michael. Yeah, that's a good number. Okay. I've now put Discord on my phone. I'm starting to get part of it that I put on there was setting up like to get alerts and stuff so you can see, hey, somebody posted, somebody asked something, somebody. So I'm gonna make sure that I have it on my phone, on my laptop, on my desktop. I think that's going to be a great resource. We just need to get everybody to buy in and start participating. So there you go. All right. Good morning, officially. Welcome to the Market Watch Group midweek check-in. I am Scott. These are the disclaimers. 43 in Rhode Island. That's not terrible. It's actually 24 here this morning. Yesterday it was like 12 degrees at this time. It was a cold one overnight. Here's what we're going to do. We'll look at the opening. So we talked about kind of our expectations and what would we need to see versus what would, what we don't want to get tricked. We don't want to be like, oh, it's a bullish day. What are we going to do? Yeah, we had a bullish day and then another one. If you had concerns, raise them for me. Tell me what your concerns have been over the last couple of weeks or the last couple of days. Sorry. A lot of concerns over the last couple of weeks. What are your concerns? Now, we said, look, there's still bullish trades that are potentially to be had. So if you put on a couple of bullish trades, I would be like, okay, yeah, I can see that. A lot of bullish trades, that might be pushing the risk management envelope a little bit. We'll revisit our posture. Do these bullish trades all of a sudden mean we're going to have a higher score? That's a question, right? That's a question that would be worth looking into. So far, I don't think so, actually. I think that a couple of bullish days would still fit into a deteriorating narrative. So we have to be thinking about that. Mindset for open trades. Yeah. What do you got? If you're willing to share, what's open? Tell me about it. We'll look at our shopping list to see if there's anything there. I really got to get in there and make a few changes to my slides because I feel like the connotation is I'm constantly looking to buy something, and that's just not true. It's just not true, right? That's just not true. I don't know, maybe not. Explore setups and Walmart. Okay, there you go. Good morning, Perry. Walmart, WMT, love it. That was one we had been talking about for sure. And trading plan progress. Yesterday, if you missed it, we had a good foundations class. Really trying to start tying everything together and seeing how everything connects. We go through a lot of different moving parts in this group. There's continuity through the week. We have our posture process. We have our trading plan. We have our record keeping. We try to work on the trading plan one section at a time, but we're also trying to actually do it. We analyze the market. We say, what's good? Where's the money flowing? Where are we willing to trade? How much are we willing to trade? And meanwhile, that you're trying to make this your own. You're going to add systems that maybe you've worked on before that you like, or maybe you subscribe to another service that gives you good trade ideas. Great. I love it. I mean, anything that positively contributes to us trading better, throw it in the soup. It's got to taste good, right? So insiders buying Delta. Okay, we'll take a look at DAL. Where are the bright spots for us as of now? Remember, what we said was that financials and industrials are really kind of, that's to avoid. In fact, if I were really starting to move into a bearish speculatively, those would probably be the first two places. The money's just flowing out of that. It's stabilized and had a little bit of a defensive pop in staples, consumer staples, and in, it's like my black screen. Sorry about that. Everyone's like, what the hell? The consumer staples and utilities have stabilized. We've actually, with strong earnings in Amazon, with strong earnings, and then with some strength in PDD, there was a couple of consumer stocks where like, hey, we saw Microsoft holding up, and you know, some software, and not really, you know, not great, but also just kind of a little bit what we would say maybe stable. So we're like, okay, maybe. Here's what's going on pre-market. Futures, the S&P are flat, 0.03 up, Dow 0.09 down, NASDAQ 0.05 up, Russell 0.27 down. The Russell just has looked so bad, right? Like there's just no interest in small caps, which is certainly concerning when you're thinking about the overall market's appetite for risk. It's not much. What appetite for risk right now, right? That's kind of what we're saying is there is a little bit of a back and forth between the NASDAQ and the Dow, where the NASDAQ's like, it's not holding up, right? That's what we're seeing in our major market analysis, that the Dow is just sort of buoyant. It's not like it's moving higher and everyone's not. It's holding up and the others aren't holding up. It's more of a buoyancy, a defensive buoyancy, than it is like oh, look how speculative everyone wants to buy blue chips. No, it's not really speculative. It's more defensive. So what else? We made it. We're down to hours. 4 hours, 36 minutes, and 6 seconds. Our good friend Jerome Powell, Jer Bear. I sent him a text this morning wishing him luck. Good luck, Jer Bear. You got this. I wanted it to just be encouraging only, so that, you know, sometimes I give him advice, but he just hasn't been listening lately. What's happening? The expectation obviously is that the rate will stay unchanged. They're expecting them to leave another hike on the table. Excuse me. Another hike on the table. And I think that's probably what it should be. I think we risk getting stuck with inflation in like a 3 to 3.5% zone, which you're like, oh, that's pretty close to 2. It's not, right? It's not. It's that wears on spending, and I mean, it's just that's not in the what they're looking for. So it's like they have to, I think, be ready to go. Okay. What else is happening this week? It's a busy week. It's a busy week. Where are we? Yesterday, that was, excuse me, it's pretty light. Consumer confidence we got. And remember what we said. We would like to see it lower than 104, but maybe higher than 100. And we came in at 102.6. That's a pretty good spot. That's a spot that, right? I know you're like, oh, come on, Goldilocks. Like, right? But if it was lower, then we were worried that the consumer is losing confidence. We want them to maintain a confidence that's like we can recover, but not like an exuberance. So we want it below 104 because that's a little too exuberant. And that's where they're just spending and putting on credit cards and and it's unhealthy overall for long-term sustained growth. But that 102 number is pretty good. So far, great. ADP employment number. Previous 89 expecting 130, got 113. The ADP number has been real volatile, and they've missed the mark quite a bit lately, in my opinion. So I don't count. I don't put as much into it. But that number's fine, right? That number's fine. That number is close enough. It's positive, meaning we're still maintaining. I would say that around that 113 number is maintaining current employment levels. Okay, that's all we need. And then today we will, job openings. We won't get those until right as we're wrapping up. That one had a positive surprise last month. We were like, it was supposed to drop down to like 8.5 from 8.9, and then it surged to 9.6. It was like this, like all of a sudden 700,000 job openings that they didn't realize were there. So, I don't know how that happens, but we'll pay attention to that. But it's the Fed, right? The Fed, and it's not the decision. We all expect it. It's priced in that they're going to leave it alone. It's the verbiage. It's their assessment of where we are and how much more needs to happen potentially. So is it hawkish verbiage? Is it start to soften and get a little bit more dovish? That is what we will be watching for. Then tomorrow, jobless claims. Then on Friday, non-farm. Remember that last month in the Department of Labor numbers had a positive surprise. 170 is absolutely fine. It's fine. We don't need job growth. We need job sustenance. We need it to sustain its level, maintain its level. So 130, that's perfect. We would expect unemployment to stay at that level there. So economically speaking, everything looks fine right now. If we can get inflation down. The corporate earnings have come back. Not a lot. There hasn't been a lot of lowered guidance. That's certainly been a concern. I would say that earnings have been, right where they need to be, quite frankly. So, yeah. Now it's just a matter of, are we going to just kind of shake this off as a correction? We can't just assume that because the economic fundamentals are good that it will. We have to make sure that the herd sees it that way. I don't have any reason not to. So I'm certainly not like the sky is falling, I need to get bearish. I'm patient. I can be patient while it figures it out. We'll see. Let's go take a look at things. Market's about to open. Let's just, for those who didn't see it, let's dial into, where is it? I had a forced restart. So I lost some documents. Let me get my posture. Resources, posture. Here we go. Okay. So how are we holding up? Well, you can see, look at that. We had a nice little surprise jump into a bullish open. Positive on Monday. Volume was a little below average. Yesterday, opened a little higher. The sellers tested a little bit, but the buyers held on, closed near the high. Unfortunately, a little less volume than the day before, so the volume diminished. Right? Where are we now? Let's get some drawing tools here. Bing. So I would say that would be my consolidation. Now it doesn't have volume, but it does seem to be. It's not here. Here's the thing: would this be something I would consider viable? Yeah, it's a little more iffy without the volume, but yes, I would. What are my concerns? My concerns are if we can't get above that line right there. That's an old. I hate these drawing tools. That's an old support level, which is likely to be a new resistance level, or not likely, but could. If I'd rather see it get a little higher still, but if it came down from here and then just sort of, the sellers lost control of it and then it started to go the other way, yeah, then I would actually say, something like that. So we have a couple of things going on. Now, I'd rather see the buyers get it a little bit higher if possible, and then catch the next move. Great. So it's iffy right now. If you have bullish trades on, you might have a little bit of ground. I said this before. Right now in this market, if I got 2 days, I'm going to take half of my profits and tighten my stop to break even. I'm not bullish enough to be like, let's let it ride and see how it can. If you make a little money bullishly, great. Take half of it. Get it. It never feels like you need to until it's too late. So you got to decide, am I going to be a little early with some and then control the rest, or am I going to be late? So like I said, for me personally, right now, 2 days, take some profits, tighten the stop, and move on. Has anything changed? No. Have the buyers done enough for us to give this a 1/4 of a point? No, they haven't. They haven't broken any highs. That's back here. This consolidation, I don't know. I don't think I would even give that a 1/4 of a point unless it got a little higher. I would still say that's the fact that it's underneath here still. I'd probably say, nah, it's status quo. If it gets a little higher, maybe it gets a 1/4 of a point. If it bounces and starts to come down on Thursday and Friday, it's going to lose a point because that's going to be a lower high. It's going to drop another 1/4 of a point at that in that scenario, right? So okay. What's next? Clear drawings. Okay. The VIX. What are the institutions telling us about what's going on right now? So the VIX has done okay. What has the VIX done? The VIX will get a 1/4 of a point. This high held. We found that to be somewhat significant. This low has now been taken out. This is a lower low, right? Lower low. So we're not looking for like new hedge opportunities at this point. Does it look like it's coming to a close? Well, then what? When this turns up, that's not triggering any new trades. That's not, oh, look, the institutions are more nervous. They actually pushed it lower than the previous, so they're a little less. If I have bearish trades on or I have a bearish signal, certainly I'd be willing to take it. But this won't, right? A lot of our bearish trades are triggered as hedge trades. That's not happening here. So if you have a bearish trade, that's going to be because you have something that is bearish enough in its setup. You're looking to put that trade on. Okay. Yeah, I don't. This one is going to make our posture slightly better. Nothing in these two. Nothing in the volume. So as of right now, we're pretty much the same. Maybe we go to a zero on the VIX and we become a minus 0.25. I don't know. It's gonna be somewhere in that neutral range. That's what I see. Let's go take a look at our watch list now. Bob says he agrees. So are you guys trading less, trading the same? Are you finding new signals? Are you reluctant? Give me your thoughts. I'm certainly curious. Where's my agenda? I want to make sure I didn't miss anything. Yeah, let's get in. Let's get into the watch list. Okay, Apple. Now, are we trading Apple? It's the day. Well, it's not the day before. It is the day before, but they get all of today and all of tomorrow. So what has Apple done right now? Apple, it's not looking as strong as Microsoft. Microsoft is held up, but Microsoft had good earnings. We are at a lower low. We are still kind of in this consolidation right here. What's the hope? I would love to see Apple get good earnings, pop up here towards 175, right? Pop up here towards 175. And then at this point, if it settles back down, bam, that's what we would be looking for, right? There's some level of confirmation that the buyers have regained control, and now we have, you can see where we are. This a lot of people are like, oh, the PE ratio is out of control on the market. If you looked at it now, I bet we'd be in a pretty and this is from a fundamental standpoint. But I would imagine that after this 10% correction, 12%, 14% on the NASDAQ, that the PE ratio overall is in a much more attractive point. And the basic underlying fundamentals of the economy are sustaining. Now, I mean, no one likes oil prices high, of course, but okay. So Apple, that's what we're looking for. We would need to see that with earnings. So let's give this by Friday, we'll have a different conversation, right? By Friday, we'll have a different conversation about this one. Adobe. So that was one that we had flagged and said, look, it's still technically a higher low. Could we come in and trade something like this? This gave a signal back on Friday, right? Back on Friday. So yeah, if someone said I'm in Adobe, I'd be like, sure, I see that. That's there's the setup and a confirmation. American Eagle. American Eagle gave a signal here. You caught a day. It started to roll over. If you traded this, I would expect you walked out with some profit. It was quick. Boom, boom, boom. Right? But the signal was valid here. By this point, you'd be thinking looks pretty good. By the next day, you're like, I don't like that at all. Okay. Is it a signal now? I would consider it still at this level, if it can hold up and turn. If it can hold up and turn. That's what we would be waiting for then. Does it hold up? Does it turn? Where is AEO located? Consumer. And I'm open to both consumer discretionary and consumer staples right now, to be actually. AIG, we talked about these as the lone saving grace of the financial sector is insurance. Aflac, I skipped Aflac. Aflac, the problem was earnings were too close here. That's aftermarket today. You have AIG and you have PGR. So, and PGR has earnings. Oh, they had earnings. So yeah, if you got into something like this, you might have a little bit of profit. Earnings and the financials for me, I just kind of was like, no, I'm gonna wait. No need to try to chase that. AMD was coming out of a lower low. The chip stock we liked recently has been Intel more so, but it did get earnings. Earnings have been okay. It's trying. Nothing yet, but let's keep watching it. Maybe the buyers are mounting a charge. Amazon is on our list. You would have had to have put it on as a post-earnings continuation trade. And that might be something that you decide to explore. But a lot of times, what I tend to notice is when they have big moves on earnings, they tend to ease more than continue. Or at least it's more of a, 50-50 proposition. But what is it doing now? It's broken its consolidation. So this was the consolidation, and on earnings, it kind of smashed up. Now it's through, and now it's actually even gotten to a higher high. So the process for reversal has completed. However, we wouldn't look to be like, all right, well, let's get in there. No, what do we think is going to happen next? Well, look at it. It's overbought. The volume clearly drying up. The buying pressure is drying up. What would we expect? I'd expect it down here today. If it holds up, I would expect any day now some kind of a red candle like this to start showing up, right? Whether it's today, the next day. And then at that point, it's the selling cycle. That selling cycle could come back here to 125. This is my old support level. It could come all the way back here to 125. Is that a higher low? Yes. Is the reversal complete? Would I still trade coming out of that? Yes. But is there this as our short-term possibility? Press says he has a put. So what I'm drawing is exactly what he's looking for, whether it's a recent put last couple of days and that drawing would give you a profit, or if it's recovering. Yeah. Is there reason to stay in? It's a tough one because could this thing keep going higher? Yeah, right. Well, that's the good thing about us waiting from and looking at this as a bullish breakout is right now we're just kind of like, all right, let's see if this starts to pull back, where you need it to pull back a little bit more. So that puts a little bit yesterday. Okay. I think you should be all right to give it a little bit of flexibility. And look to see what kind of a cycle the sellers put in. The sellers could push that all the way back down to 120, right? And our expectation of a completed bullish breakout disappears completely. We're like, nah, we're not interested. And you might be able to, ride something like that down. So there you go. Perspective, right? Perspective matters. Oil. So oil has started to turn. Anyone taken an oil trade? What are the problems? Number one, you've got earnings on anything that we're watching. COP, CVE, WMB. Number two, you could be like, oh, I'm going to be smart and I'm going to go to XLE because it's an ETF and it doesn't have earnings. It doesn't. That's true. And you can see it's given exactly the same signal where it's starting to turn. The problem is if WMB reports earnings here, look at the charts. They're all exactly the same, right? They're all exactly the same. They've come down, started to find support, a little bit of a turn, earnings in the next day or two. CVE, same thing. Kind of, not as much of a turn. Actually, I'd say CVE is looking the weakest of them now, but earnings and COP earnings, which means that if one of them has bad earnings, it's likely to disrupt them all. And if they all drop, guess what happens to XLE? It drops. I did not take an oil trade because of the earnings environment, the earnings predicament. If you took it, what I would say is be careful. It's close. You've got, this is before market tomorrow. So it's basically today. Oil was up like $2, but that doesn't always reflect immediately, right? There's not a direct correlation between the price of crude and oil stocks. There's a general correlation, but not a direct correlation. Okay, what else? CPRT, Copart. Looks just like an oil stock, right? This is a industrial, and you can see it's failing to even move out of this range here, which makes me start thinking, this could be loading up for a charge at this low. Now, I want you to notice this low is very similar to this low here. You heard of oil going to 200 a barrel? Oh, no. I mean, it was like 140 back in 2007, 140. And it was like this crazy stagflationary environment. Maybe eventually, but yeah, I don't know. Maybe eventually. Okay. This would be the kind of thing where you might say to yourself, all right, if this rolls over, I'm gonna try a put on something like this where the momentum is down. You can see that the pressure is rolling over. Yeah, that's what I would want to see if I was going to speculate to the downside. CrowdStrike. I think CrowdStrike was viable, right? It held up. Oh, there was actually one other thing I wanted to point out. Support. You can see this 43 level is super important. It's also halfway on this big candle here, which means that if this drops, it kind of has no stop until about down here at 39, which is almost the whole distance of this channel to the downside, right? So that's why I'm like, this thing could be where we really lose some momentum. Sorry, when I said no stop, I meant no support. No support. I misstated that. No support level, meaning there's nothing to hold it up. Throughout here, you can see in the as we look to evaluate support and resistance, there are two key words for it. It's been there, but it's been a while. So here's what it would be. It would be recency and frequency. So when you think about recency, you think there's one recently. There's one recently. Actually, there's two, right? It kind of hit it, popped up, hit it again. Did the same thing 3 times here. Boom, 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 right? Frequency. So recency and frequency, even as you go back, it's here. And this is kind of like the cutting a large candle in half is a very common technical concept in identifying what's next. Isn't the trend of the past history going up? There is no trend, right? I would actually say that the vast majority of price action occurs between 45 and 42 and a half. If you look at that, right? It ventures sparingly above for about a week at a time, there and there, right? It ventured above that. There's no uptrend here, right? This is primarily, now there was over here, we could argue for an uptrend, but it fell apart. Over here, we could argue that it made an attempt, but it couldn't hold up. So it's made times where it's tried, just never could fulfill. So at this point here, no, for me, this is at best sideways. And it's a sector that is showing decrease in momentum. Remember, this was the best, right? This was the best. This is what XLI looks like. Let's see what it looks like if I put it on. Look at XLI. Now, as I think about it, actually, my thought would probably be, I would rather just go with the ETF. I don't want to trade puts on the strong. That's, as I think about why I kept it on there as a strong one. Yeah, I'd probably rather go to a different industrial or financial, but look at the weakness in this group. This is definitely showing weakness, just like XLF is showing weakness. You can see we've had a couple of days up, decreasing volume, hitting some resistance now. Here's its old support becoming new resistance. And then does it make another one of these to the downside, right? Yeah, that's what I want to see. Caterpillar we used to watch. We dropped it because of its weakness. Yeah, look at that. Caterpillar, bad earnings. We've been bearish on this sector. We've been negative on this sector for quite a while now. Okay, what's next? Let's keep going through the watch list. So oil, we'll see what happens with earnings. Not really interested in trading it. EA, this was a communication services. That sector is losing momentum very quickly. EA, Google, Meta. Meta's holding up better than the others, but look at Google way down there. Buyers barely scrapping to hang on. EA way down, right? Earnings are coming out. Did they come out today? It's just that aspect is not holding up. Communication services was quite strong for some time, but right now they're unreliable. Fastenal is another industrial and one of the better, and that's what the better one looks like. Doesn't look great. Gold showing some defensiveness. Here's Intel. Intel is a bright spot in technology and a leader for chips. Broke out on earnings, made it back to the old high. If it pulls back and holds up, I would say at this 35 line, maybe even 34. We'll see what it looks like, but I think that there is a potential for this one to lead in the group. Explain fibs. Yeah, honestly, so a fib is, when you look at and you can see what I did here is I used one core move. And I was looking at it back here to see what kind of a retracement. So the fib creates these retracements, and Fibonacci is just dividing like 2 into 3, 3 into 5, 5 into 8. And there's a sequence, a Fibonacci sequence, and it creates these percentages. It's a whole, some people live by it. I think it's interesting sometimes. I always think about various levels. You can see that it's played out okay. Sometimes they're like, oh, it's like magic. See how it hit it? I'm like, and then this one didn't. It was right in the middle. Sometimes it does, sometimes it doesn't. But what it does is it just gives you some reference points to be like, okay, we hit resistance here. If it pulls back, and it just sort of moves through, right? It just sort of creates marks, milestones, or markers for you to gain perspective. But at 61.8, isn't that there's no like, oh, because it hit 61.8, now it's going higher. Nah, it's just levels. These levels are calculated specifically off of this move from 32.30 to 39. That's what this is about. All they're doing is giving you some representations of levels that might be significant. Anyone who tells you there's predictive implications, it's just not there for me, right? AMD is definitely strong, or stronger, right? I mean, it needs to hold up, but as of right now, what's it done? It just made a new lower low. It's coming strong out of its earnings. We need a higher low. Higher low, then I'm bullish. IWM, nothing. Look at the negativity. There's just no interest in small caps. Meta, it got a little bit of a retracement, but it's just not getting much further. That's concerning that it's going to make another drop towards 280. Microsoft is a bright spot, right? We like Microsoft. That would have been a difficult trade coming out of this earnings volatility, but it's definitely convinced me. So the next time I get a signal pulling back, I'm going to take it. NVIDIA, nothing yet. It's got to show more, right? If you're saying to yourself, have the buyers done enough? You got to say no, not yet. They haven't. News Corp, this is communication services as well. They're all struggling right now. PDD, had a decent trade right back here. Then you can see it fell apart. Now what? Now we'll see if it can hold up. I would still consider it here. If it could hold this level around 101 and turn, still in consideration. PGR, it's got earnings. So if you did take this trade, oh, they already reported, actually. Never mind. It's already in effect. Maybe you'd be all right to hang on. Palantir, hoping for earnings to give some direction on it because it's a little bit listless. The Qs, I mean, it just doesn't look great, right? Three small days. Now it's bumping support or bumping old support. Likely to be new resistance. Volume is dropping. Yeah, we should be concerned here, right? I'm concerned. I'm not looking to rush into any bullish trades. Earnings come out after market on SMCI. Here's the SPY. We're holding up for now. The volume's already a bit anemic, so we've got to be careful with that. Tesla is almost like some guys like, oh, it's going to be a $4 trillion company. Well, let's see if it can, make it back up to 280. It's got some work to do that. As of right now, the expectation is the sellers are in control. Here's the VIX. The VIX looks fine. VIX is a bright spot for us. Oil reporting earnings, can't do much with it. Here's Walmart. Walmart absolutely gave a signal on Friday. Still moving up a little bit. There we go. And we've got energy, XLE. Doesn't look good right here. XLF, same kind of a thing. We're at a point right now where here's the industrials. All of these have moved up a little bit, but the question is, do the buyers have enough? And if not, what are we going to do? If you're in bullish trades, are you going to take it? Are you thinking about trades to the downside? This is the moment that we're at right now. Or do you just sit and watch because there's no great signals? So there you go. Okay. This week's trading plan, remember, is personal info. Make sure that you're diving into personal info. The foundations class, we are working on trading plan, like from a big picture that hopefully gives you additional perspective as we start with section 1. So we're about to go through our next iteration on trading plans. It's a great time. You're probably trading less, so it's a great time to really be putting time into your specific rules and routines. Evaluating, making sure they're strong, your record keeping's up to date and strong. You have a few goals set and ready to go. So don't forget, I'm going to send out a reminder for Discord. Let's start some interactions there. I'm going to make some suggestions on ways to use it and try to leverage it in between our meetings because that's its primary purpose. And join us tomorrow evening for the next session of the Trading Foundations class. Hope you guys have a great rest of your day, and I will see everybody soon. As always, happy trading.
God.